We live. Wise Word Wednesdays. We live. What's happening? Where they at though? Where they at though? What's going on? Colin Brown here from gettingbolden.com. And hey man, I got something to talk to y'all about today, man. What's going on, Frederick? Hello, mother. How you doing? Hey, Colin from KJ. Hey, nephew. I love you. How you doing, Kelvin II? Love you, big guy. Hey, Z. How you doing? Hi. How y'all doing? I like when y'all start off talking to me. That's let me know that y'all can hear me, man. Make sure y'all let me know that y'all can hear me before I get cranked up. Cause I'm finna turn up today. I'm telling you, I'm finna go in. I'm finna go in. You hear me? Can y'all hear me? Let me know. Let me know you can hear me. Shoot me out an emoji. Shoot me out your favorite emoji if you can hear me. Jared, what's up, brother? Y'all let me know, man, if y'all can hear me, because I'm about to go in. So, 3 steps you need to do to become a homeowner in 2020. All right? So, there's many different things that you need to do, of course, and it's going to go into many different categories. But here are the 3 main things that you need to do. Because it's not going to be easy either way. And you're going to have to work on it most likely. But at least you'll know what to do and how to get started. You can play this back if you need to. You heard me? Hey, Francesca, how you doing? Kathy, what's up? Oh, yeah. Chantrell in here. How you doing, baby? How you doing? All right. So, all right. Let's just crank it up talking about what we know is on the list. We got 3 things, but let's talk about number 1. We know what's on here, what's on this list, because it's me. You know me. Credit. That's number 1. So, you need to have your credit right if you're trying to get a home. Do you know why? Because it's going to save you thousands and thousands and thousands and thousands of dollars. Okay? The lower your payment, the more likely it is that nothing's going to happen to you. Nothing's going to happen to your situation. You'll be able to afford your payment over the 15 to 30 years it's going to take you to pay down your home. You know what I'm saying? Because one thing I don't see a lot of people talk about is foreclosure and why it happens. You know, a lot of people go into foreclosure, which means that the bank possesses your home because you couldn't pay for it, or you had trouble paying for it, and you missed some payments. Why that happens is because life situations change. Life situation changes. You making, this income, and then where you at, they shut down. Your job shut down. They got to switch jobs. Now you make less. Now it's hard to keep up with your payment. Things like that. So the lower your payment, the more likely that is not going to happen to you. At least if it does happen, you'll be able to bounce back. If you have a high payment, a high mortgage every month, that's something that is not as easy for you to afford. That's the more likely chance you have to go into foreclosure. We don't want to do that, right? We want to keep our home. What's going on, Hillary? Al Davis, what's up? What's up? Y'all talk to me, man. Y'all can hear me. Put in your favorite emoji. All right? Because we finna go in. We finna talk about some stuff I don't see people talking about, which is very important. Because we need to cover everything. You know what I'm saying? We need to cover everything. All right? So, credit plays a big part in that, because the higher your credit score, the lower your mortgage payment is going to be. All right. So, and the way that happens is because that's the lower your rate is going to be for your interest. And that, again, that could save you thousands and thousands of dollars. We talking up to $10,000, $20,000. Like I said, I think that was like last week. I said, who want $20,000? Who want an extra $20,000? Comment and let me know, cause I do. You know, I don't know about y'all, but I do. I want an extra $20,000. I do something with that. So like I was saying, yeah. The higher your credit score is, the lower your interest rate. So that's where you want to be at. You don't want to just barely make it. You know what I mean? And my bad, y'all. And I get that from a certain standpoint. If you just got to get into your home, but if you got time, get your credit score as high as you can to lower your mortgage payment. That way, again, if something happened, you can bounce back. You ain't got to worry about it. Hey, Hillary. Hey, Miss Kathy put that house on us. That's what I'm talking about. And it got the trees on it. Gabby, how you doing? What's up? What's up? What's up? How you doing? How you doing? So, definitely low mortgage payments, high credit score. That's what we shooting for. But you got to start that now. And that's why I'm putting this out here now, because if you're going to get into a home in 2020, we need to be working on this credit right now. Don't wait, man. I don't care if your goal is June of 2020. Work on your credit right now. Why would you not want to work on it before it's time? Don't wait until when it's time. Don't wait until, oh, shoot, well, I know I'm about to get into my home, about 3 months, so let me go and try to shoot my score up. No, start right now. You got to think ahead of time. We got to think in the future. You know what I'm saying? That gives you the best results. All right? You got to think in the future. So if you want your house in 2020, start working on your credit now. Don't wait. Don't even play. Let's see. What's the lowest interest rate a person can get on a mortgage, and what credit score will normally get you that rate? I'm not a mortgage lender, so I don't have the exact numbers for that. I can comment later after this video is finished and ask one of my mortgage lenders to see what they say, because since they're active in it, they know a lot better than me. But the lowest rate right now is the high 3s, 4%, somewhere around there, I believe. Don't quote me on that, but if I'm not mistaken, that's what the rate is. And then a credit score to get there, 720 or higher will get you about the lowest rate. And this all depends on the mortgage lender. Some have different standards than others. So, but with a 720, you can pretty much be confident that you're going to get either the lowest or one of the lowest rates for certain. But 750 is even better. Yeah. So rushing to a home prematurely will cost you way, way more. Yes, exactly, Chantra. It'll cost you way, way more in the end. So it's no use to even worrying about, waiting until the last moment. Now let me get my credit right. I plan on closing in 3 months, so let me get my credit right now. No, do it right now. If you plan on getting your home in 2020, do it right now. If you get a return for your tax returns, then you need to be thinking about how you're going to use that money right now. If you need to improve your credit, you need to already be allocating that money right now. Okay, I'm going to use this to get my credit fixed. Or whatever the case is, I'm going to use this also for the down payment, which that's coming next. We're going to talk about that. The actual money aspect of it. We're going to talk about that in a second. But yes, Definitely, credit is huge. Okay, if you had 500, well, most homes. If you listen to this in Alabama, then that's a that's a real big home. So let me bring it down a little bit. So if you had $200,000, would you loan it to somebody you think that wouldn't pay you back? Just think about it. You got to put yourself on the other shoe. You know what I'm saying? You got to put yourself in the other shoe. If you had $200,000, would you lend it to somebody that you thought wouldn't pay you back? Because their credit's saying that they don't pay things back. I'm not saying it's true. It's just what your credit is saying. So would you lend that out? Maybe not. That's why you need to get your credit up. See, you got to think about this from a real world application. People think credit, and they're not thinking about how it actually applies in real life. You know what I mean? Let me go back up. What credit score would you aim before applying? Before applying, I mean, I would improve my credit. If I'm building, I would improve my credit to the absolute highest I could until the last day that I could. So, like, say if I'm in an apartment and my lease is up in April, I'm trying to build that thing all the way up until March, until it's time to get down and dirty. You know what I mean? So I'm trying to go into the last minute that I can. Not the last minute period, just the last minute that I can until it's time to start the next process. What's up, Bree? Victoria, what's up? Y'all talk to me. Don't come in and don't talk to me. That's rude. What's a good way to build your credit? Hillary asks. Depends on where you at right now. So I have to look at your credit report to give a completely accurate answer. But if you're not building credit right now, you need to be building credit. That's with a secured, unsecured credit card, unsecured or secure loan. You need to make sure you don't have any late payments from here on out. And you need to take care of the negative items that's on your credit reports. And you also need to pay down on credit cards if you already have them. That's a good way. Do they consider your middle score? Yes, actually, in mortgage they do. They look at your middle score. So what your middle score would be, if you guys don't know, you have the three major credit bureaus: Equifax, Experian, and TransUnion. They're going to look at whatever the middle score out of those three. So if you have a 750, a 700, and a 720, they're going to look at the 720. That's in the middle of the 750 and the 700. It's in the middle. What's up, Jessica? What's up, Leslie Hernandez? What's up? What's up, Heather? Heather may know the answer to the mortgage question. I believe she's in Linden. Esmeralda, what's up? Bree said hi, I was listening. Yeah, I just be messing with y'all. I do want you to comment if you come in here though, for real. LeBar, what's up? Erica, what's happening? What's up, Nathan? Yeah, so definitely that's why you need to get your credit up. Think about it. If you had that sum of money, you wouldn't give it to somebody either if they can show that they can make that payment on time. So that's what you need to be thinking about. Improve your credit situation. That's number one. Number two, this is huge too now. This is huge. Save up for your down payment and closing costs. So now there's different loan programs out there. There's some, depending on the situation, you may not have a down payment, which, depending on what you do. But a FHA loan, you're going to need 3.5%, I believe, down on whatever the home is. So just take whatever the home is, multiply that by 3.5%, and that's the down payment that you have to pay. If I'm not mistaken, I believe it's 3.5. Somebody correct me if that's not true. So you need to have some money set to the side for the down payment. Now,